Welcome to Chart Detective, where our goal is to let the charts speak for themselves. In today's presentation, we'll take a look at Lightbridge Corporation. This is the third time this year that we are reviewing the stock because it has been performing way above our expectation. It has made a 52-week high this past Friday, February 14, 2025. So we decided to take another look at it. So let's review what we had covered last time. So when we reviewed the stock, it was trading at $8.03. And we had this candlestick formation. We had a bearish Haremy. And we predicted that price would go down to $7. From there, we said we would encounter support. Stock would move back to $10. Would stop because of this resistance. And we said stock would move higher to $14 after that. And stop there because of that resistance. So this was our prediction. And if you're looking at this chart here, you can see that price went way above that. I believe that it went as high as $16.90 on Friday, and the bear came back and pushed the price down to $13.56. So let's take a look at what has happened. So far for the month of February, the stock is up by roughly 64%. And year to date, from January up to Friday, February 14, the stock is up by more than 180%. So this is the best performing stocks in the uranium sector that we have been reviewing on this channel. So last time we reviewed the stock, it was trading at $8.03, and it gapped down to $6, and then from there it moved back up again. So we can see price move up, and then on Friday it gapped down. So price gapped down to $6.17. Why? Because there was the DeepSeek AI scared, so that pushed most uranium stock down, and Lightbridge went down as well. And the stock went down by as much as 23% on that day. So the stock went into bearish territory. However, we can see we have a support line at $6.17, so that was respected. Even though there was a scare in the market on that day, the stock did not go any further from that price. And from there, we see that price will move up to make new 52-week high. So we can see the stock move up, and there we have a double top, which is resistance. We expect price to come down at that level, and this is exactly what we see happening on the next day. However, the bulls came back strongly on the next day and moved the price higher to $12.13. Not only that, this candle is a Morobozu open, meaning that the opening price and the lowest price are the same. There is no shadow or wick on this no lower shadow or wick on this candle. So that's a very bullish signal. And that was the previous resistance we had. So this resistance now will serve as support, and we expect price to pull back to that level and then move up from there. And this is exactly what we see happening on the next 2 days after. The, the price moved down to this level, $10.84, and that would serve as support as a launching pad for the stock to move higher to its new all-time high. This is exactly what happened. Right, stock pull back, and on the next day, that support line served as resistance where the stock shoot up all the way to $14.60, forming a Morobozu full. Right, this candle has no lower shadow. It has a small upper shadow, but for all practical purpose, we'll see that there is no shadow. So this is more likely a Morobozu full, very bullish candle, and that was a 52-week high. And also we can say this candle is a bullish engulfing, meaning that the bulls are not done yet. Price is expected to go higher from there. And that's exactly what we see. Price close higher on the next day. However, this is a hanging man, a bearish candle. And this is exactly what happened on the next day. Even the hanging man on the previous day was green, but hanging men are mainly bearish signals. And we see price close down on Friday at $13.56. However, if you look at this candle, the price that went up to $16.90 for that day, but at the end of the day, the bears came back and pushed the price down by 50%. So now we can see a longer period and see why the stock came down on that Friday. We see we have a top over here, and there was another top formation. So that hanging man was forming at a double top. This is our double top, so that's why price went down from there. So technicals are respected. And this is the hanging man that was formed. So that was the reason that price went down on the next day, because we are at a double top, and not only that, we have a hanging man formation. That was a bearish indication. Now, not only that, we see we had our previous two double top, but if we look back further, all the way to the end of 2021, we see that we have another top formation that was there. So it was not just a double top, it was a triple top, very bearish. So now we understand clearly why the price went down. So unless price can close above that level, above $14, we are not fully confident that the stock will move higher. So if we look at this pattern here, we see we have a parallel channel. So stock may bounce within this channel. So let's see what may happen. So we expect price to move down further and stop at this level. Why? Because we have support there, and we expect the bulls to come back and push the price higher to $20. Why? Because we have resistance there forming the upper part of the channel. This is one of the pattern that may form, but there is one more pattern I'd like to bring to your attention. If we look closely here, we may have a cup and handle pattern forming here. So far we have the cup formation. This is the cup, and within the next few days or weeks, we may have the handle formation. We do not have it yet. So that's what we're expecting to happen. It may not happen, but this is an expectation. Right? That's the handle formation. So this is a cup and handle pattern. So if this happen, so we expect price to move down below $11 to about $10. Why? Because that was a previous high where we would have support. And from there, we would expect the bulls to step back in and move the price all the way above $20. Why? Because we have resistance at that level. So this is our prediction for the next few weeks for the stock. We hope you found our presentation to be useful. Please remember to like, subscribe, and share.